Well, this week actually marks the 5th anniversary of the March 2009 low for the S&P 500, so that means obviously the start of a new bull market happened the day after, and that has so far anyway produced gains of over 200% for stocks, which actually ranks as one of the better bull markets in history. So far this year, we've been off to kind of a slow start. The S&P is up about 2% right now, year to date, and we've seen a lot of increased volatility, down in January, then back up recently. I kind of expect that volatility will continue a while longer, perhaps most of this year, in fact. That's a great question. How long will the bull market last? It's certainly on the minds of every investor. I can tell you this, if the past, I guess, is prologue, and if history is any guide anyway, the bull market still have further to go, maybe another 2 years or longer. In fact, there's been about 25 major bull markets since 1929, and a bull market is simply a gain of 20% or more, without a 20% correction in between. There have been 25 of them, and the average has lasted about 3 years and appreciated roughly 100%, roughly a double. So, by that measure, we're certainly ahead of the game already. We're 5 years into this bull market and we're up 200%. So this one is certainly above average, but it's not really running on a steam just yet. In fact, there have been several other big bull markets that have done much better. 200-300% returns, certainly are not uncommon. In fact, the biggest of all was from the 1990s, when the S&P advanced a staggering 580% over a period of about 9 or 10 years. So that was the best of all, but we could still see more upside ahead for the S&P in this one as well. That's really the wild card. The Federal Reserve's effect on the bull market has been significant. I mean, the near zero interest rate policy they've been pursuing ever since the financial crisis, that definitely contributed to the bull market gains we've seen so far. Just how much is kind of tough to say, but it's very clear to me that in a world of basically zero or ultra low interest rates, investors really believe that they have no other choice but to invest in stocks. There's no other game in town, as they say. And market sentiment today, though, is really not all that bullish. I'd say it's still a bit on the cautious side. It's certainly not irrational as we saw in 2000, for example, when the tech bull market peaked, or in 2007 for that matter. So there's plenty of investors that are still nervous, kind of eyeing the exits and waiting on the sidelines. That's what I think could fuel more gains.